So, can you all hear me now?
Yes, I can hear you.
Yes.
Uh, Good evening once again. My name is Franklin. Okay. So the purpose of this Zoom is so that I can teach you how I trade, how I pick my entries, and how I project the market where it's going to get to before any possible reversal or continuation. So from the last video I made, the first video I made, this was the pair we used to analyze GBP, JPY. And the video I uploaded it on my YouTube. It's I did an explanation on how I got my entry. I'm just using this one to quickly explain what I did the last time. But you'll be the guy, you guys will be picking pairs that we'll use for this meeting, so that we analyze it together and or back test the pair together so that you understand better. So from the last class I did, I said from when you come to your charts, what do you look out for? Hold on. Hello, Michael. Can you hear me?
Hey, Michael, dear.
Have some mute. Hello, Michael.
Yeah, good evening. I'm good.
Yeah, you can hear me, right?
Yeah, I can hear you.
Okay, we've not really gone far. So I was saying that this GBPJPY was the first pair, because in this class we'll be doing basically you guys will pick a pair that you want us to analyze, then we analyze it or back test it together. So from the first video I did with David, because that was the first video I did, I uploaded it on my YouTube. So this was the pair we used to analyze together. And from the analysis we did, the three setup, not like a setup, the explanation actually went to our direction. So now, when you want to analyze a trade, first thing first, you understand what the market is saying. Like, you don't need any magic to tell you that this thing is facing up. Are you seeing it? You can clearly see it's an uptrend, that everything is facing up. So you know that you are in a bullish market. So, and when you're analyzing, you don't analyze from here. You don't just start from what you're looking at currently. You start from your left, because the left-hand side will tell you everything that has happened in the market and what is going to happen. Because trading is just knowing where the market is going to and where it's coming from. That is the first thing you need to know about the chart. So from this daily time frame now, we can see that the market was forming a series of higher high, higher low, higher high, higher low, higher high, higher low, because all this low, none was broken. If you look at it properly, you see that this one here wasn't broken by the next one. Then this one here too wasn't broken by the last one. So this one too wasn't broken by the last one. So this will tell you that this is an uptrend. So now you see this thing keep breaking the higher high. It keep breaking from here. It keep breaking higher high, higher high. They all keep breaking. So now from here, now this trade started forming series of higher high, higher low, higher high. But if you notice how this thing was forming, it was forming a trend line liquidity. You already know that trend line. We already know that we have different types of liquidity. We have the higher high, the equal high, equal low liquidity, and trend line liquidity. So it formed the trend line liquidity here. Are you seeing it? So after the formation, this last side now had to clear out all this liquidity. It cleared out all this liquidity here. That is why you think, because some people now might want to start looking for a buy here, another buy around there, thinking that the market is just coming to tap an OB or a point of interest. So it cleared out all the liquidity before using this other block to buy. So now already you know what this market is saying from here. For this other block to be tapped, that means the market is coming around here to clear out this high here. Are you seeing it? That is what, because the market is in a series of higher low. So this is our last low that was created, and this is the last high that was created. So if the market should come down and break this last low, you should know that you are in a downtrend, because this low must be protected. So everything that is happening here now, they are all internal liquidity, internal ridge liquidity, everything that is forming here. So there is one issue that people have when they take a trade. Because of the market will go to this place to clear that liquidity and that high. So they will just buy from here, then forget about all this, because all these things you are seeing here, everything you are seeing here, all this, I think this one we got it from the so let me remove it. So all these things you are seeing here now, all this last high, all this internal high you are seeing here, they are all liquidity. So market needs to clear them first. Once it pay attention to everything that is happening here, this was the last high that was created before this dump here. Then use this one to buy this other block to buy. So now, if you pay attention, you notice that immediately this thing cleared this high here. You see that it came down. Immediately it cleared it. Then pay attention to this, the next one. This is another high here. This is another high. This will help you a lot. So pay attention to this thing I'm saying here. So this is our daily time frame. Just know that we don't analyze from daily time frame. This daily time frame, we just want to know where the market is going to. So this is another high that was created here. So immediately this thing tapped here. You see how it came down. Then this is another high. It tapped. This is where the market is currently reacting from. This last high here. It tapped and it came down. So below here we can see a trend line forming here, under here. You can see a trend line liquidity forming under here. Are you seeing it? So what is the market doing? Each time it clears this, each time it clears any high, it goes down to that what is it called? The trend line. Then goes up again, clear another high, goes down to the trend line. So now I already know that the market is just going in this form: up, down, up, clear the high, come down, go up, clear the high, come down. So this is what the market has been doing. So now we already know that the market is trying to break this high to look for another. Maybe with the market, we have to come to this point here to clear out this liquidity. Who knows? Remember, we are not the market, so we follow what the market is presenting to us. Are you guys hearing me?
Yeah.
Yeah. So we follow what the market is presenting to us. We can't predict the future. So not like we can't predict the future, we can't predict what the market will do. So now, since we know that this is where the market will get to before coming down, so we pay attention to that point. So we go to our 4 hours time frame. Now you can call this your bias. You can call this, you can look at this and call it your bias. This is your daily bias. That from here now, because this is where the market is currently. From last week, when we analyzed this, this is where the market around here. I think the market was around here, around this green point. That's not going to all this place. So now, what I was expecting from last week was this high. This one has already been swept. This high has already been swept. That's why it came down. So what I was expecting for this one now to sweep this one too and come down. But there, let me not use daily time frame to explain it, since we already know what daily time frame is saying. So we go to 4 hours time frame. Now from the 4 hours time frame, all these lines, they were from the daily time frame, right? All these lines we are seeing here, this is the liquidity that was cleared from the daily time frame. So now, if you look at this, all this high, they are all liquidity. All this high you are seeing here, they are all liquidity. All this high, they are all liquidity. So it's best for you to, when you are setting your TP, always make sure you are setting it just at the top of the last high that you feel like will be cleared, but don't be greedy to say that since you can see everything, it will clear everything and clear this high. Just pay attention to the recent one. That's why you use the higher time frame to see all these things, then go to lower time frame to catch your entries. So from the 4 hours time frame, we can see our lines here, our liquidity. We can see all this liquidity, all this entire range liquidity. We can see everything. This is another liquidity here.
Mommy.
You can see this. You can see this side. You see this side that was cleared. Immediately it tapped, it came down. Meanwhile, still maintaining the trend line from the daily. So from here, we have another one here. It tapped, it cleared, it came down. The next one tapped. Okay, this one has already been cleared from here. It tapped, so that already cleared this liquidity. So the next one, this is what we are looking at. So if you zoom in, you see that let me remove this thing so that this is how we got this entry. Now if you look at this point, the market has tapped on that daily liquidity, right? So definitely we are expecting a pullback into the range. So now we have our breaker block here, because this is a break. It broke this high. It broke it, then came back to all this place. It put back, but it didn't tap into the breaker block. Are you seeing it? It didn't tap, it didn't touch it. Meanwhile, this place now, this place has already been cleared. So the market needs a strength to still go up. It needs a push, something that will push it, because it can't just push like that. It needs something to push it up. So since there's nothing there, and we already know what the market wants to do, so we pay attention to this point here, and we pay attention to this point here that wasn't broken. That's why then we'll go to our 1 hour time frame to see everything clear. So from the 1 hour time frame, this is our breaker block here. This one, because it failed to do its purpose. Its purpose was supposed to push this market down, but it failed. So it became a breaker block. So since this point here, if you notice what the market was doing, it was doing a series of higher high, higher low, higher high, higher low. Then higher high here. No, higher low, higher high here because it broke this last one. Then this was their last low that gave us this push to the upside. But after this push, what happened? This after this liquidity has been cleared here, it put down and broke this last low. After that, what did do? It gave us an inducement here. Are you seeing it here? Are you guys with me? Hello?
Yes, where were you?
Yeah. So now it gave us this inducement. After the inducement, it gave us another break of structure to the downside. It put back up, gave us a break of structure. So now, some people will be like, this thing now, the market is in a downtrend. Before you know, they start hopping in, hoping for it to clear that liquidity, that China liquidity. Meanwhile, all these POI here, they are still not used. They are still fresh. So we waited for it to come to this point, but it didn't get to this point. So now, since it hasn't gotten to this point, what is the market currently doing? We observe. You see that it didn't get to this point. It's not getting to this point. So pay attention to this point, this POI here. This is a bearish order block. And these are all inducements here. These are all liquidity that needs to be cleared. You remember what I told you about all these highs? They are all liquidity. So this one now, the market has cleared this one here. Always pay attention. If you are paying attention to all these things, you'll be seeing it. This is another high here. You see how immediately market cleared this high? It came down. Are you seeing it? It came down. It cleared this one low, but all this one it's not necessary for now. Now, this is another high that needs to be cleared. This is the last high here. This one here. This one too. This is another high that needs to be cleared. So let's play it and see. Okay, as I was saying, this is another block. So for this market to get to this place now, or if this one should get to this place first, so it all matters which one will get to which one first. So this is our other block. This is our inducement. This the same thing here. This our inducement. This is the last liquidity that needs to be swept, because this is the last one. All these ones have been cleared already. This one has been cleared. Are you seeing them? This one has been cleared. This one has been cleared. So it's left with this one to be cleared. Are you seeing that using this concept now, you'll be understanding which one to use as your inducement? You guys can unmute your mic so that we can be flowing together.
Yes.
Yeah. So using this concept now, you know that this is the last low that needs to be swept. After this low gets swept, what is next? A POI will be here. Then this one, once this one gets swept, there's a POI above it, because this is the last high that has been created. This one is the last high. So that's how I got this entry here. I did, and in the first video you see it. Although I was expecting the price to break out, hopefully to break out and induce people, like after clearing this high, then it will dump, because people will be like, why is, sometimes you feel like I got my entry right, but it still took me out and started going to my direction. It's because of all those highs. But now in this situation, now this is the last high that needs to be cleared. Are you seeing it? This is the last high that needs to be cleared.
Yeah.
The next one we'll be expecting is this high to be cleared too. So now let's see what happens. Now this last high has been cleared. Are you seeing it? Are you seeing
Yeah.
it? But let's see where it will get to. After I cleared it, you see a reaction it did there. But now no strength, nothing to push it down. There's no point of interest here to push it down. So it doesn't really have strength. But you see the reaction that happened there. So now it has tapped us. Okay, it has not tapped us in yet. Okay, we are in. Are you seeing it? Now this other block now have the strength to push it, because all these are places where the big boys play their game. All these points here. So you see, let's see what will happen now. Now from this point now, you already know where the market is going to, because this 1 hour is a big time frame. Although I advise that you stick to 45 minutes, 1 hour to get a clear entry. 45 minutes to 2 hours, in between 45 minutes to 1 hour, 2 hours. Stick to this time frame. You get a clear entry, although the risk to reward is not high. But from this place now, you already know that, okay, this is where the market is reacting from. It cleared an inducement, it cleared a liquidity, it came to our point of interest. Definitely the market is heading to this point to clear this liquidity and tap this breaker block, a point of interest. You know, there are different types of point of interest. Are you guys aware of that?
Yeah.
We have breaker
Yes.
block, we have fair value gap. Fair value gap is a point of interest. We have order block. We have there are about 7 of them. I'll have to check my book too, because I don't use other ones. In short, I don't even use fair value gap, but fair value gap is also useful. But I only use breaker block and other block. So now we know that this is where the market is heading to. You can just go to cut the time short. Let's not do the lower time frame entry, but these are the things you still look at in the lower time frame, because it works in all time frame. Even from the daily time frame, see how it start reacting, Abi, to 1 hour, it's still reacting. You see how they are reacting. So it has tapped our what's it called? Our point of interest. And another thing I realized that a valid point of interest always give you a sniper entry. That's what happens with a very valid point of interest. So it has cleared this liquidity here, then tapped a point of interest. Let's see what happens next. Now this was how we got that buy and sell. When you go to lower time frame, since you already know that this is where the market is going to, anything you should be looking for is just buy until it gets to this point, because this is where the last liquidity is. Yeah.
Bro, sorry for interrupting you. Catching those buys is the main problem. Not getting like not actually like you getting where the market is getting to. Always miss entry. If I try buying a lower time frame, like Euro GPY, I was about to catch that buy, but I didn't catch that buy. The
Yes.
market was just up.
Now that is where this thing I mentioned comes in. That's why I said that your miss entry, you might think it's a miss entry, but it's actually reacting from a fair value gap. That is why I said there are other types of point of interest. Like this place now, this is a fair value gap. If you look at it, are you seeing it? You know what fair value gap is now?
Yeah,
Yeah, you can see that fair value gap is also a point of interest, but people don't really pay attention to it. So now this is a fair value gap, and this is another block. Some people might be waiting for this other block, and if you look at this place now, there is no breaker block around there. It's just other block. So some people might be waiting for this other block. Meanwhile, market will just come and tap on this fair value gap and keep pushing, because it's also a point of interest. So now, another thing you should note is that before price gets to this if let's say you missed an entry for this your missed entry now, immediately you missed an entry, before the price gets to this place, your missed entry is still valid. Only if price gets to this point and clear this liquidity, your point of interest becomes invalid. That is your setup. It becomes invalid because it has cleared the liquidity. What is it looking for? It's looking for a liquidity to clear. That is what the market does. It just moved from liquidity to liquidity. So now, we continue the game, and let's see. This fair value gap is valid. This other block is valid. Since this TP has not been tapped yet, everything is still valid. Now you see that this last high has been cleared. This last liquidity has been cleared. Are you seeing it?
Yeah.
That has been cleared. So I was hoping, even though I was hoping for the market to get to this point before pushing down. You see that I didn't pay attention to that place, moving my this thing. What's it called? My point of my TP to that that point, so that I'll be like I caught 1:18. Now that is not how the market move. Market move from liquidity to liquidity. Since I know that this is what market is coming to do, clear this thing. Any other thing it doesn't really concern me. So I'll just put my TP to be realistic with my with my profits. I'll just keep it on top of the liquidity. Then it clears it. Sometimes it might not really clear it. And when that thing happens, it's especially when your point of interest is reacting from a breaker block. It might get to all these points. It will not clear it. It will not clear it because it didn't have enough momentum. That is why I said your point of interest, they are all still valid, except your TP gets hit before it gets to your point of interest. So now let me explain that thing I said now. When price gets to, now let's say you took your entry from a breakup. Let's say there was a breaker block around here. Let's say there's a breaker block around there. Then you were hoping for price to get to this place, but it didn't get to this place. Are you getting me? Then it fails. Once it fails, it's coming to use your other block below it to push back. And once that other block gets triggered, it must clear that liquidity, because there's no other thing, because the other block has failed to clear it. So now this liquidity has been cleared. Let's see what happens next. So this point of interest here, where I got it from was from the 4 hours. Because I explained this from that last video, because this is our breaker block, right? And we are hoping for the market to get to this point. We are hoping for the market to get, but now the breaker, although we are hoping for the market to get to this point, we are still realistic with our liquidity, because our liquidity, yes. So now this other block, now it's cleared. This breaker block, right? Sorry, this breaker block now, it tapped, then it didn't get to that point. This point here, this point for the market, because this thing now, this is a very dangerous place to look out for this liquidity, because when this thing will start clearing out all this liquidity, people will be looking for sales around all this place and buy around all this place, and everything will be failing. They'll be like, this week has been so bad for me. Meanwhile, it's the liquidity is clearing, and even though it's clear, it doesn't mean the market is what's it called? Is bearish, because look, this is our last low here, and this is our last high. So anything that happens here, we are still maintaining our bullish trend. Everything that happens in between this place, we are running out of time. I was hoping to get you people to ask questions, so that, but I hope with this one, people are really getting what I'm saying to some point.
Yeah.
Yes, small, but I have a lot of questions.
And maybe we are going to host like another class again after this one, so I'll have more time, even though I wanted to do some things. So now this is what happened. Now our breaker block has been used. There's another block here. As I'm using all this point of interest, I'm still respecting our trend line, because this is the original place to even trigger from, because this is where the trend line is. The market goes up, come down, tap the line, go up, tap the line, because what you'll be looking for, the point of interest close to this trend line, this is what you'll be looking for. So your market gets to either this place and starts dumping. So this is where I got my entry from, that other one. So let's go back to 1 hour, where this is where I mostly get my trade from. So after getting my entry, because sometimes you might look at it, 1 hour point of interest might be looking bigger than 4 hours, because look at that 4 hours now. Look at what I marked. Are you saying that this thing, because I marked from the body, of the candlestick. So you see that this one has a lower risk, lower what's it called, risk, higher risk to reward, because inside daily order block, 1 hour order block, 4 hours, which one do you think is stronger? Definitely 4 hours will be stronger than 1 hour, because if I've taken my trade there now, maybe it will reduce my what's it called, risk to reward. Although sometimes you can still tap here and move, but I just felt like this is where this one is closer to the trend line. So let's see what happens in this place. Hello?
Yeah, we can hear you.
So I
Yeah,
thought
we
this
are flowing.
so now this that liquidity has been cleared. Let's see what happens next. Are you seeing? Are you seeing what is happening now? The liquidity has been cleared. So what is happening is coming down. It's coming down to clear out this liquidity here. Because this liquidity now, this is the last liquidity that was created. Remember, anything that is happening here is still within your uptrend. So because of this last low was let's say because of this last low was swept, now you think that maybe the market is currently in a bearish move. Meanwhile, it's just cleared this liquidity and looking for another point of interest to trigger. So let's continue. And remember the part where I said once your TP has been hit, your point of interest, they become useless. Remember?
Yeah.
Yeah. Now look at this other block. Look at this fair value gap. You see, they are not doing their work. If this has not tapped this place now, all this fair value gap, because if you look at this fair value gap, it's reacting from this fair value gap, but it's not really taking it anywhere because the aim has been achieved already. What is looking for now is this low. This is where the eye is. This low here. That's what it's just looking for. So let's continue. Are you seeing it? You see how this other block self
Yeah.
didn't even react self. It didn't even look at his face because it has become invalid. Normally, other block was supposed to give you at least a little reaction. So now it tapped us from the 4 hours other block. Are you seeing the sniper? Are you seeing the sniper? This is 1:14. Although let's see what will happen this week, because this is where the market is currently. So far so good. It has been. Are you seeing how is? Are you seeing it? Are you seeing the sniper? It's where the market is currently. I think this is the last. This is the last move. So the market is still moving currently. So let's see what will happen if it is going to clear out this liquidity here. Because I always try to be realistic with my and my profits. This 1:15, but I prefer to leave it at this point here that is serving as resistance as well, even though the market wants to clear this liquidity here. So let's use this short time to answer question. What's your question?
Okay, so Chief, this last high now before your last buy, the last high, you said it cleared.
Yes, this
If
one.
price had closed, yes, you see that it just wicked out of it.
Yes.
But if price had closed above that candle, would you still consider this other block that was there?
This other block.
No, the upper one.
It said if price has closed above here, will this one be considered?
Yeah,
Now,
yes, exactly.
now if this thing closed now above here, if you look at itself, some candlestick closed above it. Look at all these candlestick. They close above it, but all these are liquidity sweep. They are all liquid. They just wanted to sweep that high, this high, yeah. So even though it closed up, okay, now if this candle should close here now, where is your inducement? Because inducement happened after a break of structure. So even though you call this a break of structure, you can this place can be you can call it a break of structure. This is a break of structure. This is a break of structure to the upside. But after this now, where is your inducement? Because inducement, this is how this market move with inducement. All these tools, I'm still trying to master them.
Yeah, see down there.
Okay, look at it now. This is how markets move. This is your higher low, higher high. Then higher low. Then this thing now, it breaks this this last, what is it called? This last high. It broke it to the upside. Now this is a break of structure. This is a clear break of structure, not a liquidity sweep. So after this break of structure now, it gave you, and now the markets will come in. Now it's put back into the internal, it gave you internal liquidity. Internal liquidity then goes up. It can be here, it can be above, but all you just know is that, okay, it can just clear this, it can just clear this last what is it called? This last liquidity here. This liquidity here. Then after clearing this liquidity, what will happen? Market is coming to clear this internal liquidity, because, you know, like I said, liquidity is liquidity, right? So now when the market gets to this point, okay, I'm saying what is causing it.
A double tap.
Yeah. I'm trying to hurry up before this thing elapses. So now, this is definitely this there is another block here. There's definitely going to be another block here, because it's the other block that led to the break of structure to the upside. Now, this is where this is your last high that broke. This other block here broke structure to the upside, right? Then there is a breaker block around there. Are you seeing it? This point here, there's a breaker block around there, because this breaker, there was originally there is another block here, but the other block now failed to break structure to the downside. That is why it failed to hold the market.